Sandy Chaikin from Chaikin Analytics on our fourth and final Inner Circle session. So we've talked about a number of things in the previous sessions. What to buy, when to buy, how to monitor your portfolio in 15 minutes a day. Today's session is about how to avoid pitfalls. And I'm adding kind of a section to that of how to know when to sell, because that seems to be investors' biggest challenge whenever we ask our webinar guests what their biggest challenge is. It's always timing. When do I buy and sell? So I thought what would be productive today is to use the half hour to go over the examples that I used on the Inner Circle where the topic was timing, when to buy and sell. And let's go back and revisit those timing points and see how they panned out. And in the meantime, we'll know and identify when a stock is breaking down. So I think that what I do is always look at context. And by that, I mean I look at the SPY first, which I've pulled up here. I've pulled up my live Chaikin Analytics desktop. So you're looking at the SPY in real time. And this always helps me frame the decisions that I'm making, because it just gives me context, knowing what's going on in the general market, because our decisions and the stocks that we invest in are impacted by what's going on in the market. So here we go, looking at this big waterfall decline back February 6th to, what is it, 12th or so. Went back up again, pulled back, up again, pulled back. And now we're in this kind of secondary declining movement, coming down again. You can see money is coming out of the SPY. That means institutions are selling. And it's negative relative to the Russell. Normally, your stock charts are relative to the S&P, but you can't compare it to itself. So it's compared to the Russell. All right, so we see we're in a downward trend here, right? That's pretty clear. So let's go back over these stocks that I featured a couple of weeks ago. I guess it was 3 weeks ago. We've just over the weekend added this feature up here. You can click on this little tab up here or this little tab here in your workstation and get this note. And so what I've done is added the notes of when I buy and sell. And so this is now part of my routine. I went back into my stock list and put the notes in for when I bought and why. So let's look at these together. So you can see here with Progressive, my notes say that I bought it on an oversold buy signal January 3rd. Let me just close this to get the oversold buy signal overlay. There we go. And here's that oversold buy signal, early January. I got the signal. As you can see, it oversold buy, obviously oversold. A little bit of money coming out, but they were coming up to earnings. So I wanted to get in on this stock before earnings because they have a history of doing well, and they had a nice 5-year chart of doing well as well. So they reported, and then the stock, pulled back that whole February, as we just saw in the SPY. Everyone pulled back on that. And then it popped back up again, up to its upper volatility band, and I sold the stock at 58. Now, it's since gone up since then. Looking at this stock, I would not say this is breaking down. Money has just turned positive, strong power gauge rating, and strong relative strength. So this certainly is not a stock that I'm concerned about breaking down. Rather, it's a stock I'm considering rebuying, because now it's oversold, and the outlook looks good, and they're reporting in a few weeks, April 17th. And I might want to get in on that before they report, anticipating the spike. Okay, let's go to the second stock, Columbia. Pull down these notes. This stock I bought on a momentum buy signal. Let me just get this out here so you can see these. Here's momentum. And this one way back in late September in here, see it was oversold, strong money flow, strong relative strength, and strong power gauge rating. And they reported up here 2.8, and I sold it right after they reported up on this upper volatility band to take the profit. So took a 13%, a 25% profit rather, in those 4.5 months. So that was a nice trade. Is this stock breaking down? No, I don't think so. There's a little bit of money coming out, but everything else is green. So I would not say this is breaking down at all. AbbVie. Okay, this is a dilemma stock. I bought this stock back here on a limit order during that market correction of 10% on February 6th. Put in a limit order, 102.10, and it got filled. And later in the day, it actually went up to 113, as you can see from there. So I thought that was pretty good to get that nice buy in there. It's one of the biggest big pharma companies that's benefiting from tax reform. So the outlook was good. It was highly recommended by Jim Cramer and Mark. So I bought more on this pullback here, March 15th, at 115 when it pulled back 3%. And then what happened? A week later, they announced that they were not going to see accelerated approval for phase 2 testing of a certain drug. And it dropped like a stone, like 13% in a matter of hours. So now you see things have turned south. Is this stock breaking down? Well, it certainly has that pattern, doesn't it? There's big decline here, negative money flow, negative relative strength, and a neutral power gauge rating. What I've said with these drug stocks is my outlook on them is different from the outlook on, say, a tech or a healthcare stock, for instance. These can be far more volatile than other industry groups because of the whole approval process. And when they get a drug approved or disapproved, it can have a violent reaction on the stock price, as you can see here. So I either have to make the decision to sell this and take the loss or hold it for the long term, anticipating that, like most of these bio drug stocks, it'll come back as their approval process matures and gets better. That's the dilemma on this. But this clearly has the signs of a stock breaking down. Centa. Let me pull the notes down on this. This I bought on a relative strength breakout late September. Right in here. You can see it was oversold, money coming in. Power gauge had just turned positive. And I got that buy signal so that everything looked green and go. I sold it right after they reported. I mean, look at the history they have when they report. It spikes down and then it spikes up. It spikes down and then it spikes up. So when we came into earnings and it spiked down, I mean, look at this spike down to what, 33? I didn't panic because look at what I was looking at. Green power gauge, green relative strength, and green money flow. And knowing that the pattern was exactly that, spike down and then spike up, I just wait for that spike to come up. And I got it, and I sold it up here at 41, I think. Yeah, 40, 45. It took the profit. That's the beauty of this workstation, is that when you see something spike down 10% like that and you look at the setup, you know, and the pattern, you know to expect that. And stay calm and just stick with the plan. Wait for it to spike back up again, which is exactly what I did, and sell it up here at its all-time high. Now, is this stock breaking down? Well, it wasn't looking so good in January and February, right? A little bit of negative money flow, negative relative strength, and a neutral power gauge rating for the most part, and some sell signals. So this did not look rosy. However, I think it's turned around. You can see money flow and relative strength are now positive. And this could even flip over to positive. It's a neutral plus, which means the underlying factors in the power gauge are positive, but that it's dropped below this 200-day moving average, this orange line. And look at the context within the broader market. It's not as violent as the SPY. Let's flip back to the SPY and look at what's going on there. This is nowhere near the pattern we're seeing with Senta. So I would say this is a good candidate for a buy, certainly before they report earnings on May 2nd. I don't think this stock is breaking down. Cigna. I put this in here because this is an example of a stock breaking down. And you can see why I'm saying that. Power gauge, relative strength, and look at the money coming out of this stock with a sell signal back here at the end of January, just before they reported. And when they reported, there was a downward reaction to it. And they were talking about buying Express Scripts, and many of the analysts don't recommend that as a good idea. Thus, you can see what's happening to the stock. It's clearly breaking down, and you even have a sell signal here. Let's probably have a few other sell signals as well. Maybe overbought sell. No, not yet. Just that. Just those relative strength breakdowns. Sell back here by the earnings. That would have gotten you out had you owned this stock. But I did want to include, for comparison's sake, something that I feel is breaking down. And this would be a stock to avoid right now. First Financial, let's go back to the notes here. This stock I bought 11.17 with a money flow buy. Let me overlay that on here. Money flow. Get back my little notes. 11.17 looks like right around in here. Yeah, here we go. Again, all green, oversold, dipping down, and a nice setup with everything green and a buy signal. So that looked like a good buy. I bought it at 54. I still own this stock. I made myself a note here as to why I didn't sell it up here when it hit the upper volatility band, which is one of my sell rules. And unfortunately, I was in Boston presenting at the Women's Wealth Forum those couple of days and was pretty much out of commission for several days checking on my stock. So otherwise I would have sold it up here when it hit this upper volatility band. So it's overbought right now, or I'm sorry, it's oversold right now. When I'm selling, I like it to be overbought or up, up peaking against this, 70 mark up here, as opposed to dipping down. So this stock, I think it's down with the market. Power gauge is neutral, but it has this neutral plus, meaning the 20 factors underneath it are positive, with the exception of it falling under this 200-day moving average, this orange line again, which most stocks actually have done. There's a ton of stocks that have gone from bullish to neutral plus for that very reason, because they fall with the market. The rising tide floats all boats, and unfortunately it's true when the opposite happens as well. JP Morgan. Okay, let's see my notes on this. I bought this recently on one of these pullbacks, 3-1. was on this pullback, I think. Yeah, right in here. You can see it pulled back. I did not wait for this to be oversold, even though it was dipping down, because the market was, and has been so violent, volatility each day. I felt I'll just get in on this dip. I think it had like a 3% pullback right in there. And I thought I'll just take advantage of that and bought it at 119. So that's what I did with JP Morgan. This also recently has fallen under this 200-day moving average. There is money coming out of it and a neutral power gauge rating. However, I don't think this stock is breaking down, and therefore I'm just holding on to it as I am these other stocks that we've talked about, unless I had sold them previously for the profit. So this looks like, I mean, this is considered the best managed bank in the country. So this is actually on sale now as a stock idea. Although if I were to buy more of it, I would wait for this money flow to get positive again and for it to start to the turnaround back up again. Okay, let's look at cores. Cores I bought and sold. Okay, again, I put a limit order in like I did with AbbVie back here in that violent February 6th day. And I put the limit order in because the markets were so erratic. I put it in at 60.60 on this 10% correction back in here, and I got it. There had been a recent relative strength, subsequent relative strength buy signals since. So you can see in here by these little green triangles. But I sold this really just to take the small profit, a 2% profit, and get some money into cash, because that's what I'm doing with all my stocks. If I can take a profit, even a small one, that's what I'm doing, and putting it in cash until this kind of volatility evens out. So I sold this back up in here, 326, very recently. Yeah, right up in here. You can see the power gauge had turned neutral, but neutral plus, so the underlying factors again are great. Relative strength is strong, a little bit of money coming out, not enough to worry about. But I thought it's kind of flattening out here, as it had for the last couple of weeks. I thought, well, I'll just take some money out of the market and take my small profit and put it into cash, which is what I've done. LPLA, LPL Financial Holdings, that is. This stock is also one that I sold and took a profit, a 9% profit in 2 weeks on. But I bought this back in January 19th. Yeah, it was on this pullback right in here. Had been up over its volatility band. It pulled back. Morgan Stanley upgraded this stock to equal weight, and then it did pull back a little bit. So I saw that as an opportunity, bought it at 50, almost 59 back in here. And they were reporting, and they've had a good earnings record by Green. They beat analyst estimates, which is always a good thing, and can spike the stock up, which is exactly what it did here. They again reported February 1st, it spiked up, and I sold it on that spike. I sold it right up here at the high, 64. Took my profit. So anytime you get a spike like that, for whatever reason, more often than not, it'll come with a positive earnings report, beating analyst estimates, but doesn't always have to be. And even if you don't know what the reason is for that spike, just say thank you very much and get your money and be happy. So that gave me a 9% profit in 2 weeks. Okay, so what's this stock doing now? It's pulled back a little, as has just about every other stock. But you can see money flow is just ticking back to positive. Relative strength is strong. Power gauge is neutral. So this stock is not a stock that I feel is breaking down. Okay, so let's go to the last example here, reinsurance, and then I'm going to open it up. And so if there are stocks you want us to look at, just type them into the Q&A chat window, not the chat, but into the Q&A box there, and Chris can read them out when I'm finished with this one example. Okay, this is reinsurance. Bought this on oversold. So let's pull up oversold. Go back to my notes. I can see I bought it December 11th. There's that oversold buy. You can see it was indeed oversold. Shortly after, though, the money started coming out big time. And you can see what happens when things are green and money comes out. It tends to, go flat. It bumped up a little bit, but now it's come back down again. So they reported they disappointed. The stock started to fall. And I said, well, I'll just get out with a small loss at 155 the day they reported. And I could see also that same day, power gauge turned neutral and relative strength started to turn negative as well. On top of the negative money flow, I thought, I'll just take the small loss now, 3% loss, and get out. And you can see it's now down to 152. Is this stock breaking down? Well, it certainly looked like it back then, January, when I sold it, January 30th. But now you can see it's starting to turn around a little bit, little money coming back in. Still a dip way down, but that is kind of even with the market. So even though the stock was breaking down, I'm not sure it's breaking down right now. But those are the types of things to look for. So when power gauge turns neutral, not neutral plus, because neutral plus is still good. It's just below this 200-day line. Negative relative strength and negative money flow, that's when you start thinking this stock could be breaking down. And those are the telltale signs of a stock breaking down. And that's what to look for. So in this extremely volatile market we're in right now, where the market can have broad swings to Trump's tweets about Amazon or whatever else he's thought of at the moment, you got to have a plan. You can't be buffeted around by Trump's tweets and the market's reaction to it. I look at this as a longer term view with a disciplined approach. Disciplined approach meaning we've got the rules that tell me when to get out and when to get into a stock and when to hold on. And when you see a pattern like, let's go back to FAF, I guess, stock that I'm currently in. When you see a pattern like this, there's no reason to get out of this stock. Things are good. Things are good. So I hope that gives you a little more context for how to know when to buy a stock and when to get out and the beginning signs of a stock breaking down. Chris, I know you've got some little survey questions to put up and ask the attendees if they don't mind taking this, since this is the last of the 4 inner circle sessions. But if there's any questions or stocks that people have asked that we pull up and take a look at, maybe you can call those out now.
Sure. We do have one question. Any example where you took 10% or more loss? If so, why did that happen?
10% or so loss. Yeah, I'm just trying to think. Well, let's use Cigna, okay? I mean, because that could be a very good example. Had I owned this stock up here, I would have held it going into earnings. Okay, let's use this as an example. Because look at the 1-year and the 5-year trend. This is all really good going into earnings, right? For the last 5 years, they've only disappointed 2 quarters out of 5. And look at the roll this stock has been on since late 2016. So all systems were pointing towards another good earnings report. However, that's not what happened. So if I had owned this stock and it was up here at 227, they reported, and then I see the stock starting to break down like at 200, 203 here, I would have sold it in here. And that would have been, what, 209 after 220. That would have been almost a 10% drop. And that's going to happen. You know, you can't always have winners. You can't know that they're going to announce that they'd like to buy Express Scripts, and the analysts don't like that. And came out with that news that they don't like that. And that's what caused the stock drop. Those things are you can't predict those. But that would be an example of taking a 10% loss, and that's okay. That's going to happen. Better to take your 10% loss there and get out at, what, 209 or whatever, than be at 165 where we are today. So if there's no further questions, Chris, maybe you can put up the questions that we're asking you to complete, this being the last of the inner circles. So I hope you've enjoyed them. It's been a lot of fun for me, and hopefully for Chris too, as our organizer, to give these each week. All right, so our goal in giving you these was that this would help you understand Chaikin Analytics better, help you become a better investor or trader, and give you more confidence that you can make profitable trades, given the disciplined methodology that I follow in the 5 steps, excuse me. So if you don't mind answering these questions and then just submitting them. This, as you know, has been a test. It's the first time we've done this. And we want to know your feedback, whether it's something that is worth continuing. If you find it has value and would like to see more of it, either as an independent session like I'm doing here, or perhaps on the Monday open forums to our subscribers that Joe Bocella and Dan host every Monday. If you'd like me to come on and perhaps present on one of those once a month or so. So Chris, if you have the replies, we don't need to display the replies, but if you have them and want to go to those additional questions that we're just you're going to put up in the Q&A window, we
Sure.
could go to that.
We'll put those in the chat window.
Great. Okay, so if you can all open up your chat window, there's a few more questions there. And just answer to the best of your ability. That would really help guide us in knowing how to perceive this going forward. And Chris, I can't see this, so I'll depend on you when we have the replies in to let me know, and we'll just close out the session.
Looks like they're still answering them, Sandy, so I'll just leave it up for another minute.
Sure. Okay. All set, Chris?
We are all set, and the other two questions have been put into the chat box.
Okay, great. All right, I think that wraps it up. So I hope you all have enjoyed this inner circle sessions that we've been hosting the last 4 weeks and have found it valuable and helpful to your investing and trading. It's been a lot of fun giving them, and if you have additional feedback you want to share with me, happy to receive that. We do listen to our subscribers and try to make the workstation and platform as user-friendly and helpful as we can. So I welcome any feedback you want to give me. Just Sandy@ChaikinAnalytics.com, Sandy with a Y. All right, Chris, I think that wraps it up. So thank you all for attending these past 4 weeks. And I am giving a webinar this afternoon. If you want to register for that, it's at 4:15 today, Tuesday, April 3rd. Register for that on our website, ChaikinAnalytics.com, and get a little more education and reinforcement. That one is about timing as well. Okay, terrific. Thank you all, and good luck with your trading and investing. Bye-bye.